Hello, everyone, and welcome back for the post-market analysis. What happened today? So, in the pre-market, I alerted that we are looking for 524.66 on S&P 500. We got a little extra supply, but the price is back. So we are back in the same range, 526. So 524 was the entry I was looking at, but because of I was more focused on Nvidia today, so I took an entry on Nvidia instead of S&P 500. So what we are looking at for tomorrow, we are looking for the recovery right here. As soon as we see the price was falling continuously, we came in the demand area, price spin, first green candle closing upside. So we are bullish for tomorrow. We are looking for this area to go reclaim tomorrow. First, retest the 200 EMA right here, and then go and retest the Fibonacci golden zone from the downside. So tomorrow we'll be looking at 533.52. So this is the area of recovery, and then there will be an undecided area here. Then we will have to see whether the market will continue or pull back again. So this is on the S&P 500. One thing is very important. First, I'll go through the Nvidia analysis so that people understand what I'm talking about. So Nvidia, the price was right here in this area. So let's say right here in the morning, 9:30 candle closed at 106. When the 106 candle was closed, pre-market, and I alerted throughout the day on this trade. Right here in the pre-market, I said day range for Nvidia is $100.58. At 139, again alerted in the Discord that I'm still waiting for the $100.74 as since alerted in the morning. The price precisely dropped to 100.84 and a little bit like few cents down. Took the trade right away, 245, took the trade. As soon as this price came, took the trade for September 20th, long synthetic. 20th of September, shorted the put for $100, bought the long call for same date, long synthetic. And the right here, I took the trade at $100.79. Within 1 hour of the next two candle, this is the profit we make. This is what people need to understand. When the markets sell off, when you know the price point where the price is coming, do not panic. And I when I was in the Discord, I also saw that few people even in the Discord, they started panicking. No, we know the price. When we know the price in the market in 7 o'clock in the morning, we know that the price will drop to $100.74. Then be ready to buy that price and go long synthetic right away. So this is what you need to do. When you understand the market, there is nothing to panic. The panic doesn't get you anything. Right away, it dropped to the same price we will be looking at, 100.58. It came right by the pennies and bounced back. And tomorrow you will see it opening in this area. So this is the area that I'll be closing my trade, the long triangle. From here to here. Fibonacci retracement above 200 EMA. This is the rejection level here, the resistance right here. So this is the resistance, one resistance coming from this channel, from higher high to lower high. Definitely the price will come and touch this price and have a rejection. But I'll be closing my trade a little early at 108.91. This area, I will close my trade. I'll have a solid profit until tomorrow. Most likely, this will double by tomorrow. So when the markets sell off, you need to be ready. Keep following the candle. Do not open the trade. Keep following the trade. Okay. Red candle, red candle, red candle, continue. Let the candle go. As soon as you see this, the price is outside of the linear regression. As soon as you see the next candle twist, let me show you the clear candle on the S&P 500. Look at this one. The price was dropping, sharp drop, continuously dropping, and suddenly you see the price swing, this candle, undecided candle, means this is where the buying will start. And right in the next candle, shoot up back in the channel. So there is nothing to panic in the market at all. Identify your pivots. Market works in pivot points. There is no rocket science here. Market knows, we know in advance where the market is going. We know that where the reversal is. We can go wrong in a trade. Yes, there is a possibility. But most of the time when you identify the pivot, be ready to take the trade in that area. So let's continue our analysis for Tesla. Exactly same thing happened. Tesla dropped. I closed all my Tesla call here, right in this area, this wick. This is where I closed my TSLA covered call and the Tesla covered call. Book the profit, now back, and tomorrow again, once the price comes back to 251 area right here, this area, I'll be going covered once again. So this extra premium we got the profit downside for almost about 250 to 233, about $17. The delta was about 20, so $230 per contract. Plus, we'll be gaining more premium tomorrow. Again, we'll be selling the same covered call for September strike price 370. So that's where we are looking to offload our share, $370 for September. So again, the price will come back to 251, and I will do the same trade. 20 September, $370 covered call again, and we collect the higher premium back. So we made the money while the market was going down. We'll cover ourselves again at this price, because we know that this is the price is also in the falling wedge. So if the price need to fall back again in Tesla, this is where the neckline is. This is where it will fail. The price will not fail anywhere in this area. Let me give you the range. So this price to this price, this is the range. The price will come back. But if you are looking for the failure, where the price will fail to break out, whether it will break out or it will reverse, this is the area. This is the falling neckline of the falling wedge. This is where the price will fail. So at this point, we'll go covered once again. So this is how, when you understand the market, that's how you plan your trade. If you are here, you go covered. If you are here in a falling wedge bottom, second lower low, you close your covered call, and back you go uncovered right here. Be ready to sell the covered call again, or shorting the downside here. Okay, let's go to the Bitcoin. So Bitcoin, I'm still holding it here. A little bit of retracement from the downside. If you see that this sell-off, it was precisely alerted right by the second. If you look at here, okay, it's taking some time to load the screen. So go down right here. Taking a trade now, and after Baba, you will see somewhere here the Bitcoin. So right here, 10:18 in the morning, I says Bitcoin has to sell off at 84,789. This was the price. I knew it. This is the range, 84,789, and retest $81,234 downside. So this is, I'm still looking for this price. I'm looking for this price to retest $81,000, which is also the Elliott wave C right here in this area, in between of this point number 1 to the point 168, somewhere in between of this area. This is where we will retest. So Bitcoin, possible retest towards 81,000. If you go to the daily, you will have a clear identification of the price. This is what it is, Fibonacci golden level, 81,234.36. So I'm looking for this red candle, which is a daily candle. I'm looking for the price to trace back to $81,000 and then continue the wave 3. So if you look at this green part, this is wave 1, and now we are in wave 2. So retrace, maybe possible Friday sell-off, because generally the market always sell off on Friday. So the Friday sell-off, retest $81,000 and then shoot up towards $95,000. 88 first target and then $95,000. So we are in wave 2. So market will be choppy this week for Thursday and Friday. And then we are looking for the bullish breakout for the next week. So make sure when you identify these opportunities in advance. So what is happening here? If you be careful and you look at the map, let me show you what we are looking at. So you see this, the falling wedge upper resistance right here. So what is happening? We have a clear breakout. We are bullish on Bitcoin. The trend reversal has already started. We are in wave 1. So what we are looking at, the breakout of the neckline of the falling wedge here. So then the price went up, and now we are looking for the reversal to retest right here in this area. Retest this and continue the wave 3. So we are bullish on Bitcoin, but it's a retracement into wave 2. So which most likely tomorrow and day after on Friday, it will retrace in this area and then continue the upward momentum. So when you identify the opportunity in advance, when you know that what the chart is going to do, what the market is going to do not panic on small things like Powell says something or interest rate or any news. You should be ready to buy that dip. So continuing to Tesla, this is very important stock to discuss for next week, because we have an earning coming up. So here we go. I'm looking for a sell-off on the earning. There is a most likely there will be a pump before the earning towards 291 area. This is where I'll be buying, adding some put on my portfolio as a protective put. Till then, I just closed my covered call. I just closed my covered call on the TSL spread as well. So I'm bullish. I'm looking for the recovery in this area. So until 22nd of April, which is the earning date, I'm looking for a pump in Tesla, and then we go covered for the earning. Till then, we'll hold the share and the TSLA long call. So tomorrow we'll be looking for some recovery in the market from the today's sell-off. If you look at again, so right here, it's a retest. Wave 1 on S&P 500. This is wave 1. This is wave 2. We retested. I draw this chart I draw this line in the morning. If you watch the morning video, you will see that this line was drawn in the morning, because this is the Fibonacci line of this and this. So from here to top here, if I can show you the Fibonacci retracement, you'll see that. So take the point here and take the point here. You see that 51 area, 0.50%. So this is where I was looking for the market to retest, and that's what exactly market did, to retest this area today itself. Now, since we have retested, there will be recovery and the wave 3 will begin. Wave 3 will put the stock, the first price target we are looking for 551, second price target we are looking for 570. These two are our crucial pivot. That's where the market will sell off. Either the market will sell off at 551 or it will sell off at 570. It will not sell off here at this price where the people were panicking today. This is not the sell-off point. This is Elliott wave 2 continuing to 551, fill the gap at 558, most likely either drop at this point. This is where I'm looking for market to fail, 572, 571 area, this arrow here from this previous high. So far we are bullish on the market. Market will have a recovery tomorrow. This is what I'm looking. More clarity we will have in the pre-market session. If you look at right now, the market is recovery, and that's what we were looking for. So market is doing exactly as we are looking forward. Tomorrow the target will be 531. 531, if the market claim, pay attention here, if the market reaches 531 tomorrow, there will be another sell-off because we have this resistance coming down from this point. So right here, again, there will be a pullback. If you look at smaller time frame on 15 minutes, this will be wave 1 and 2 down. So this is wave 1. If I show you here, so if this is wave 1 on 15 minutes, the wave 2 will be here like this. So tomorrow, market will again at this point, this area, 531 to 532, this is where the market will sell off. But we want market to come here, right here, and then we'll go covered exactly as we do that. Second wave down, again, we'll be closing our covered call and let it ride in the wave 3. So that's all for today. Market is bullish. There is nothing to panic. When you identify the opportunity, keep an eye on the market. Follow the candle. Keep following the candle from here. Keep watching. This was the first candle. Okay, now some of you will have a question. Oh, there was a green candle here. Why didn't I buy here? And how did I know this candle is the last one? Okay, look at this particular candle, which area it's forming. This is the linear regression top line. This is the center line. This is the bottom line. So if we are in the cloud area of linear regression, which is the bluish area, this bluish area. So if we are in the cloud area of linear regression, how can be the bottom here? It's not possible. And same time, you look at the MACD, look at this, the death cross, and it's opening. So that means this is just the price trying to spin, nothing else. This is a fake. So the price will not take a reversal from here, and it will continue. As soon as it continue down, 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 and you look at the volume color changes on the MACD, then you know that, okay, we are about to mark the bottom because the volume candle is shrinking and the color has changed. Means that the seller are fading. This is what this color is representing. Red color means seller are strong. Pink color means the seller are fading, and green color means the buyer are in control. So once you see the color fade and the smaller candle, you know that the seller are in exhaustion level. So this is where the price will spin. This was not the case here. So now we have a confirmed green candle above the zero line. So this is what that's why we are bullish for tomorrow. It's not a bullish momentum. It's a recovery of this drop today. Recovery to the Fibonacci level right here in this area. So tomorrow on Tesla, we generally trade 30-minute chart. 30-minute chart will be looking for 251 area for the recovery, and again then we'll be going covered on 251. So by the time the price will reach 251, we'll have a solid premium built up in the call, because there is another $12 upside to go. All right, so I'll be online tomorrow 9 a.m. With the pre-market briefing, and we'll see how the overnight price action will change. Thank you so much for tuning in, and I'll join you at 9 a.m. tomorrow. Thanks. Bye.